Hi and welcome to Penser Bank and our analyst presentation on Instalco. My name is Marcus Almerud and I'm an analyst here at the bank. So Instalco acquires and develops installation companies in the construction and industrial verticals, and we see 70% upside in the share. The investment case in short is that Instalco has and will continue to consolidate the installation market in the construction sector, while it has just started to consolidate the industrial installation market. Since it started, M&A has accounted for about 85% of sales growth, and margins have been relatively stable. The acquisition pace have accelerated in the recent past, and we expect this high rate to continue and expect earnings to continue to grow at a rapid pace. So the reason for talking today is to provide some read across from Storskogen's Capital Markets Day, and also to give an update on where we are in terms of valuation and earnings trends. I will touch upon the business cycle, the competition for M&A targets, prices for M&A targets, and end up talking about earnings trends and valuations for Instalco. So starting with the business cycle, Storskogen is planning for recession and use words as deep when they talk. It also said that it seems to be the consumer market that will drive the coming recession rather than industries, which is different to the last recessions we've seen. It's worthwhile pointing out here, again, that although recession would be troublesome, the main driver here has and will continue to be acquisitions. When it comes to the pace of acquisitions, Storskogen said that it will decrease its pace. Given its high activity level in the past, this should mean that the competition about the targets will decrease, which we believe is positive. We expect Instalco to keep a high acquisition pace, and also that the weight of acquisitions will be outside of Sweden and in the industrial segment. All else equal, less competition about the targets is on the margin positive. On prices for acquisitions, Storskogen said that prices have come down and they expect this trend to continue. From what we understand, most of the so-called compounders have seen relatively stable prices over time, and the current environment should be no different. But nevertheless, if prices for the marginal buyer will go down, it will be easier for everyone to find the right strategic fit in terms of acquisitions. The market gets more sound as prices for acquisitions stabilize. This brings us to earnings trends and valuations. The huge discrepancy between earnings and share price performance for Instalco has continued, and its valuation gap to mature peers remain. So it's important to point out here that while Instalco's earnings trend was negative for a while and weak, it's now back on track. And as you can see from both Instalco and peers, this trend is forever rising and has been for many years. And this is because acquisitions is the main driver of sales and earnings. So we've been worried about the derating of the universe, as we don't know where it will end, what the market will decide the right long-term multiple will be, but we also note the discrepancy within the universe. So we see no reason for Instalco to trade at such a large discount to its mature peers, and we think that this gap will close over time. Thank you.